The live intraday price for Rezolve AI PLC, ticker symbol RZLV, currently sits at $5.28 per share, marking an increase of $0.15 or 2.92% in today's session as of 1:16 p.m. Eastern Time. Now here's the immediate counterintuitive insight. Most retail investors are still preoccupied with the recent short seller report that caused a significant price drop, but the reality is that the stock has quietly managed to hold its critical support level near the $5 mark and saw a massive institutional financing deal anchor its recent growth story. That resilience, despite the negative narrative noise, is the first thing that should force you to reevaluate this volatile stock. The common expectation is that a stock hit by a highly publicized short report, alleging misrepresented revenue figures and AI capability exaggeration, should continue a steep descent. Investors, especially those who rely on quick information from social media or less sophisticated investing sites, view the stock as deeply wounded, likely expecting a continued breakdown below key psychological and technical levels. The reality on the trading floor, however, tells a slightly different story, one of a battle being fought between aggressive short interest and significant institutional backing. The trading volume today is substantial, over 10 million shares already, which is the kind of activity you see when smart accounts are either adding to their positions during weakness or short sellers are covering some of their bets, both of which inject volatility but also provide liquidity and a temporary floor. Think of it like this. The company recently closed a massive $200 million private placement, anchored by what were described as returning fundamental institutional investors, which is a powerful vote of confidence from players with deep resources and extensive due diligence capabilities. This institutional cash infusion provides a financial cushion that significantly diminishes the impact of the negative shareholder equity and substantial net losses, a key concern for anyone looking at this company's financials, even those using the analytical tools provided by SoFi Invest or their individual brokerage. This capital is the most direct contraindicator to the short seller thesis, suggesting that the most sophisticated participants in the market believe the growth story is real and the balance sheet concerns are manageable, at least in the short to medium term. When firms like Fidelity or Interactive Brokers see their institutional clients commit hundreds of millions, it shifts the gravitational pull of the stock away from pure retail speculation. The trading setup over the last few days has been a tug of war. After falling from its high of around $8.45 set in September, the stock found strong buying support precisely in the $5.07 to $5.12 range, which also happens to be near the low end of recent analyst price targets. This isn't random. This shows a programmed response from algorithmic trading or large institutional orders buying at technical support. The technical analysis shows bearish signals from short-term moving averages like the 10-day exponential moving average and 20-day simple moving average, which reflects the recent price decline. However, the stock still maintains bullish signals from its longer-term moving averages, such as the 50-day and 200-day simple moving averages. This divergence is the heart of the current tension. Short-term weakness driven by news and momentum players versus long-term strength suggested by fundamental investors and historical price action. For any active trader using an Interactive Brokers trading platform to monitor real-time data or a Robinhood stock trading account for faster execution, this divergence signals extreme volatility and risk, but also potentially high reward. To properly frame the next 10 days for RZLV, we need to understand the foundational business. Rezolve AI PLC is a pure-play artificial intelligence company based in the United Kingdom, focusing its proprietary large language model LLM specifically on the retail and e-commerce sectors. Their platform, known as the Brain Suite, is designed to transform commerce through what they term agentic commerce, which essentially means AI-driven autonomous shopping experiences. Their products include Brain Commerce for multimodal product discovery, Brain Checkout for instant one-tap checkouts, even supporting crypto to fiat payments, and Brain Assistant for enhanced customer support. The expectation here, especially in this post-NVIDIA stock landscape where AI is king, is that a company with AI in its name and a market capitalization north of $1.5 billion must be delivering exponential revenue growth. The reality of the financials, however, is that this is an early-stage, high-burn growth story common for software companies of this profile before they achieve scale. The reported net loss for the 6 months ended June 30, 2025, was substantial at $57.9 million, up significantly year over year. While revenue is projected to grow aggressively, the company is not yet profitable and has negative shareholder equity, meaning its total liabilities exceed its total assets.
This is the financial risk that the $200 million financing was intended to mitigate, essentially providing the cash runway it needs to scale its operations and acquisitions without having to halt operations. In a bull market like the one we've seen supporting Tesla stock and Apple stock, these losses are often overlooked in favor of future guidance. Rezolve has been aggressive in providing guidance, recently raising its 2025 annual recurring revenue (RRR) guidance to $150 million and initiating a 2026 exit rate guidance of $500 million RRR. This is the fuel for the bullish narrative. The recent acquisitions of SmartPay and Subsquid, completed just last week, are clearly strategic moves designed to expedite this growth. SmartPay adds digital asset payment infrastructure, aligning with their crypto-to-fiat checkout capability, and Subsquid adds blockchain data processing capabilities, strengthening their overall data backbone for their AI models. These are concrete steps toward fulfilling the promise of agentic commerce, but they also introduce integration risk. The key catalysts and potential scenarios for RZLV over the next 10 calendar days, which translates to roughly 7 trading days, will be a direct response to the recent news flow and the ongoing technical battle. The primary driver will be a follow-up announcement or even speculation around the nature of the large institutional financing. A common play after a significant private placement is for the company to announce new enterprise customer wins or a major commercial partnership enabled by the new capital. Since RZLV has already mentioned partnerships with large companies like Microsoft and Google, any concrete deal announcement leveraging their brain suite could provide the unexpected positive news needed to overwhelm the negative short seller sentiment. A scenario could involve a major global retailer announcing they're integrating RZLV's Brain Checkout into their physical or online presence. The absence of such news could allow the short pressure to resurface, potentially testing the $5 support level again. Technical traders are watching the moving averages closely. A break above the short-term resistance around the $5.52 to $6.15 range, where there is accumulated sell pressure, would signify that the recent bottom is holding, and a move back toward the $7 resistance is plausible. Conversely, a definitive break below $5 would open the door for a rapid descent toward the 52-week low area around $1.07, given the high volatility associated with this stock. The volatility itself is significant for RZLV, which is a trading opportunity for those with high risk tolerance using fractional shares through platforms like Robinhood or self-investing accounts with Fidelity. But it's a major risk for those seeking stability, perhaps better served by a Schwab Intelligent Portfolios or Fidelity Investments mutual funds approach. Another short-term catalyst involves the ongoing public relations campaign. The company has aggressively rebutted the short seller report. Over the next 10 days, we might see a more detailed presentation or investor webcast that moves beyond a simple press release rejection and attempts to provide tangible, auditable proof points for their revenue and technology claims. Transparency is the only long-term defense against such allegations. If the company is unable to provide this clarity quickly, the market will likely assign a larger risk premium to the stock, hindering any attempt at a sustained recovery. The theme of expectation versus reality is most acute here. The expectation from the institutional investors who funded the company is that the management team can execute on their growth and integration plans, while the reality is they have to fight a public narrative battle with short sellers who are heavily motivated and well-funded. This kind of intense, news-driven stock action is what makes trading individual securities so different from passive investment strategies. It highlights the kind of complexity that makes resources like Schwab Intelligent Portfolios attracted for broad market exposure, while stocks like RZLV demand constant vigilance and independent research. It's a reminder that even in the modern digital landscape of online investing, where data is everywhere, conviction is still the scarcest resource. The sheer volume of trading suggests that there are two groups of highly convicted players on either side of this trade. The short interest is high, aiming for the downside, while the institutional funds that participated in the capital raise are signaling conviction in the high growth forecasts. The longer-term outlook, which will be influenced by the next 10 days of trading, centers on commercial execution. Can Rezolve convert its technology, which is built around a proprietary retail-focused large language model, into sticky, high-margin subscription revenue? The market has priced the stock assuming exponential growth, yet the fundamental reality is that they are deeply unprofitable with a negative cash flow from operations. The pressure to show tangible commercial wins, not just in acquisitions or funding rounds, is immense. They need to prove their value proposition against established retail tech players and other specialized AI firms. The age of agentic commerce they are outlining is a compelling theoretical framework, but until they announce major demonstrable and recurring contract wins, the valuation will remain highly speculative. Comment below how many shares of Rezolve AI PLC, ticker symbol RZLV, you currently hold, or if you prefer the stability of index funds available through Fidelity ETFs. Instead, your perspective on this high-risk, high-reward security is a valuable data point in this volatile environment. In summary, the expectation after a short seller attack was a deeper breakdown for RZLV, but the reality is that the stock has shown remarkable short-term resilience, backed by a massive $200 million institutional funding round. The next 10 days will be a critical test of whether the company can translate that financial stability into positive news momentum, likely through major customer or commercial announcements, to overcome the bearish technical outlook and the fundamental drag of significant unprofitability. The technical trading range to watch is bounded by the strong psychological support at $5 and the short-term resistance between $5.50 and $6.15. How the stock reacts to these levels, driven by news or volume, will define its trajectory for the rest of the quarter. This is not a straightforward growth stock. It is a high-stakes, narrative-driven momentum play where the conflict between perceived risk and massive potential reward is playing out in real time on the Nasdaq. The story of RZLV is a prime example of how in online investing you must constantly weigh the idea of a company, AI commerce, against the reality of its financials and the volatility of its public market trading. The market is waiting to see if their technological vision can overcome their current financial reality.